Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here today. We're taking a closer look at Matic once more to help you identify a good entry point and just understand more specifically what's going on in the industry and help you with best practice along the way, right? Because my goal is to help you become a much better trader, teach you to trade for a lifetime instead of for just one day. All right, now I'm not a financial advisor. I have tons of experience, years of experience, but just know this is for educational purposes only, and you should always do your own research. Okay. I have a link to my Telegram, Patreon, and Discord channel in the description below if you'd like to join up. A really good group of folks there. You can learn a lot. Jump in and let's go ahead and engage and get more knowledge, right? The more you learn, the better you're going to be, right? Furthermore, I have $25 in Bitcoin available from Telegram. Feel free to reference that as well. And without further ado, let's just go ahead and get right to it. All right, traders, let's go ahead and take a look at Matic. And what we do before we go ahead and look deeper into the technical charts for Matic is we look at Bitcoin and Ethereum first, just to get a baseline of the market so we know exactly what's going on there and how it's influencing this specific altcoin. All right, so let's go ahead and take a look at that first. And what we do is jump on over to Bitcoin. So we're going to look at the Bitcoin 4-hour chart first. I like the 4-hour chart because it's kind of the best chart for my indicators, and I do use, just so you know if you would like to follow along, the 200-day moving average and the 50-day moving average. This yellow line is the 50-day moving average and the purple is the 200. Also, furthermore, this is TradingView. I'm using the TradingView desktop application. All right, so this 50-day moving average that we see here, the yellow line, it previously worked as a support, recently a resistance, and just now as a support. So good news is the price broke above the 50-day moving average and it should likely continue upwards. Or at least the hope is that it comes down and bounces and continues up, because as you can see here, we've had a couple of higher highs and also higher lows, right? So good news is we've got some positive indications here of an upward trend. It's not a super strong trend, but it is a trend nonetheless, okay? So that's kind of how that works. And then moving on to Ethereum. Let's take a look at Ethereum. So this is Ethereum right now here. This is the 4-hour chart as well. And as you can see, there's a resistance line of about 3,100 for the 200-day moving average, as well as 2,900 for a current support and resistance level. Obviously it's a resistance, but it was previously a support. And for the most part, we can see that the price action is above the 50-day moving average, and it is essentially following suit to Bitcoin. But the good thing is it's a little bit higher than Bitcoin was. So we're seeing a little bit better progression for Ethereum, and that's normal because Ethereum should be higher in general than Bitcoin, and it typically outperforms Bitcoin because most Bitcoin holders will sell their Bitcoin and move over to Ethereum when Bitcoin comes down. Right, so we're probably seeing that right now a little bit. Again, not a significant difference. They're both very similar. I mean, look, this is Bitcoin here, and then this is Ethereum, right? So a little bit higher of a ramp up, which is nice. Okay. All right, so let's go ahead and look at Matic. And let me go ahead and remove these here. That's from a previous chart. We'll look at the 1-day chart first here. So taking a look here, as we can see with Matic, we had a super strong increase. And then we have the China candle here, and then it's been kind of a storm ever since, right? But great news is Matic has strongly increased over the past, or at least in this 3-day period here, to come back up to its average true range of roughly $1.80. So I mean, I'd mentioned in a few of my previous analysis that $1.60 to $2.20 is kind of the range where you should expect to see, and it's kind of following that suit. In fact, it's kind of working itself into a little bit of a wedge, and there's a good chance we're going to see a breakout in the near future. Okay, price is above the 50-day moving average and the 200, so we're good there. And the RSI is pretty darn good shape right in the center. That basically just tells us that the price is fair to middling. It could go up or down either way right now. I think what's happening is Matic is waiting for Bitcoin to figure itself out, right? Bitcoin can go sideways a little bit longer. I think we're going to see a large spike in volume from Matic and should likely see an increase. If Bitcoin can get upwards of 42,000, we're going to be in really good shape to see Matic start testing some previous resistances. Okay, so that is the 1-day chart. Let's move on to the 4-hour. And the 4-hour chart pretty much tells us the 50-day moving average has been working as a pretty consistent support and recently became a resistance level. Okay. Good news is the price is still above the 200-day moving average, and that is trending upwards. So if the price continues to go sideways for another, just say, a few days, maybe 4 to 7 days, then we might see the moving average get tested soon, right? Because it's moving kind of slow, but it's also kind of quick as well. So that'll drive the price up further, which is nice. But I don't expect we're going to see that. I feel as if Bitcoin will continue to progress in an upward fashion. And of course, Matic follows suit. Okay, but RSI is right in the center. Not much to note here. It is essentially not going anywhere. It's kind of hanging out in the center, and that happens. And that's basically another reason why I think there's going to be a breakout soon. In fact, why don't we go ahead and mark that right now, because I'd like to kind of note this here, because if we look at the price action, we go from here, the highest point, to the average point here, and kind of work our way from here to here. Again, this is a very rough estimate. I don't put a ton of weight into this, but if you can kind of see what's going on here, we are likely to see a breakout likely in the next couple of days, and I'd be very surprised the price doesn't progress upwards, as long as it can get past the 50-day moving average and stay above. Okay. Again, there's no guarantees in these marks that I just made. Of course, wedge patterns are never truly consistent, but for the most part, when you see it kind of working itself into this slower, longer channel, breakouts are essentially inevitable, especially in light of what Bitcoin's doing right now. Bitcoin's going sideways. I think this is a calm before the storm, before Matic decides it wants to explode. Again, just my thoughts based on its previous history. It has a tendency of doing very well when Bitcoin goes sideways, and I think we're going to see something happen soon. All right, so that's the 4-hour chart. Moving on to the 15-minute. What I do first and foremost is I remove the moving averages, because the simple moving averages are less effective on shorter time frames. So anything under 15 minutes, or just say actually more so like an hour or less, then you're going to want to use an exponential moving average instead, and also likely the volume weighted average price. Okay, so let's just go ahead and start with the EMA line. And this is the EMA 15. That's basically the indication that I use. A lot of industry standards are going to be using the 20. I like the 15 because the 20 and the 9 kind of, if you split the difference and average them out, the 15 works a little bit better. I feel the 15 works great on the 15-minute chart. Coincidentally, they work very well together. So just something to note, but that is my indication that I use. Might recommend the default 20 though if you feel more comfortable with that. But in this sense here, what the exponential moving average is it's essentially it's an indication of momentum, right? It works very similar to what a MACD would do. So the moving average convergence divergence, it's basically taking a moving average and also an exponential moving average and kind of overlaying the two. Well, the exponential moving average, if you overlay it over the price action, it makes more sense because it's consistent. You can kind of see how the price is responding to it. So if you can see here, price was above the EMA, held as a support. Price broke down below the EMA, held as a resistance. So it's a common trend you'll see very frequently for bull runs and bear runs. And the good thing about it is that it helps you identify when the momentum is moving in the direction you want to head. It's kind of like a self-check, if you will. So I always look at the EMA to see, okay, great, we're in bearish sentiment right now. I'm going to go ahead and wait for confirmation and wait for it to find its bottom before I take entry. And what I mean by that is confirmation is waiting for the price to jump above the EMA line and to basically test and hold above that for no less than 30 minutes, right? So you want to see two solid green bars closing above the EMA line to get that confirmation. You can currently want to use the VWAP as well, all right? Now the VWAP is an interesting thing. Some people don't love it, but I think it's probably one of the best thing ever. It's the bee's knees, if you will, for me, because I'm more of a day trader, and I feel that it is something that is extremely effective to understand if the price is either overextended without using an RSI, and it can really tell you a lot. Because what it is, it takes the volume the last 24 hours and expresses it as a price. So if we see here, do you see how it kind of comes up with these higher lines and it drops down right here at 5 p.m. Pacific or 5 p.m. wherever you're located? It will essentially reset. So this average resets right here, And the reason why is because it's built on a traditional trading scale, right? So in other words, traditional trading is open from 6:30 a.m. until 1 p.m. and the post market is open from 1 to 5. As soon as 5 o'clock closes, you'll see this happen and it'll go ahead and close itself and reset itself, right? So that's why you always see a reset at 5 p.m. your time, because that is kind of more of a traditional stock market. That's kind of how I used to trade. And it works very well in that sense. Still works good here, just the average resets. Regardless of that, with what you see here, essentially the price is exactly right where the VWAP line is. But if you look a little closer, technically it's below. That being said, when the price is below the VWAP line, it's working as a resistance level, right? Because the VWAP is awesome because it tells you if it's working as a support or resistance. Instead of marking a bunch of support and resistance lines on your chart, it really works more effectively in the last 24 hours to tell you what the price action should be, right? So right now the price is under VWAP and EMA, so it's not a good consideration for an entry point. Okay, so that's just kind of the simple way of understanding it there. Now a good entry point, good potential entry point, let me go ahead and kind of show you what that might look like. Because when you want to take entry, the best time to take entry is when the price again is above EMA and VWAP. So let's just go ahead and do an example here. If we take a look at this guy, this is a case in point where you want to consider taking entry. So if you see, for example, these two green bars that are closing above the EMA and the VWAP line, right? So right in this range here. So you essentially take entry somewhere in this range, right? Somewhere here or here. Let's just say here to be safe, right? Say you got in right there at the peak. It's not a problem. That's okay. The reason why it's okay is because when you take entry, first of all, you take a small position. You don't take a large position. A very large position is problematic because if it reverses on you, you could be out. If you don't have good risk tolerance, you're going to be losing a lot of money really fast. I have a really tight risk tolerance. That's why I'm very conservative. I only like to lose 1% at all times, and I set a stop loss for that specifically. But just say, for example, you get in right here, see the price come up again. Ooh, great, awesome. I found a good situation here. I'm in a good entry. And the price comes down, you get a little worried. Okay, it's coming back down to where I got in. No, that's okay. Hold on to it. See how it bounces and respects the VWAP and EMA lines, right? So when you see the price come over and it kind of bounces off the EMA line, in other words, right here you see it bounce essentially, then that's an awesome indication of a bull run. So it's basically telling you that the bulls are in control. Okay, so when the price comes up, what you do now is you wait for the RSI to pop up over 70 and pay close attention. Okay, so RSI tells us right here that at this point is a consideration for an exit point, right? Not exactly correct. Now, traditionally, you're going to be taught that RSI is essentially an indication of a sell signal, right? That's true to an extent. It is considered overbought. But if you exit your position every time the RSI jumps over 70, you're going to be losing so much. You're not going to be helping yourself, right? The reason I say that is that when you see this come up over right here, had you got out of this position, you would have netted yourself approximately 7 to 8%, right around 7.5. Okay, now that's fantastic. I would be super happy and super stoked with that. All right. I love getting anything between 5 to 10% on a short-term swing trade, or in this case, that is essentially a day trade where you're only in your position for 2 to maybe 3 hours tops. And that's fantastic. So keep that in mind. That's not a bad thing. But when you have a scenario like this where the RSI is up over 70, maybe consider either A, adding to your position just a little bit, or B, writing it out until the RSI comes back down. All right, and what I mean by that is if you look at the RSI and you see where it's coming down over here, as soon as it starts to kind of decline and no longer increase, that's a better indication for a sell signal. And that would be roughly in this range here. Okay. So would you rather a 7%, 7.5% gain or a 14% gain? Almost double. And the main reason why is because you waited for the RSI to calm down and to start coming back down. Okay. And you have to come to terms with this. You'll never buy at the lowest point and you'll never sell at the highest point. But if you can understand what the industry leaders are doing and they're controlling the market and you get in and out using these indicators before they do, you're going to be in much better shape. Again, that's the whole concept of trading. It isn't to 10x, 20x, and 30x your gains because Mr. YouTuber told you that this is a good trade. The important thing is to steel yourself and actually have some good tactics and good risk management and get in and get out when you need to, instead of holding on. Because look at this. Say, for example, you held on. This is a very tumultuous time frame to be holding on. Never turn a day trade into a swing trade. Trust me, I know. I've done it before and I've lost a lot of money. And it's stupid. It's terrible, terrible, horrible thing to do. I'm only saying that from experience because I can tell you it sucks so bad to have, be up this much and to get down that much. That's why hodling can be very treacherous sometimes, right? It can be very challenging, very difficult. So just something to note, something to be aware of. And, hopefully that you understand that. But that's kind of what I'd like to recommend. Pay attention to these things. That's how you want to take good entry. But I can tell you right now, there is no good entry point at this specific time for a short-term swing trade or a day trade, okay? Because as you can see, the price is under EMA, under VWAP, and it's not good. Pay attention moving forward to how the price reacts to this potential wedge pattern that's forming. We should see a breakup or breakdown in the near future, just based on the overall movement from Bitcoin. So if Bitcoin can stay over 37,000, trend closer to 42, I think it'd be a strong consideration to take an entry from, in Matic, so you can get a good, some good value there. So again, if you're planning to hold on, like just say, for example, you're trying to hold on for a good 2 or 3 months, it wouldn't be a terrible thought process to kind of maybe consider taking entries soon because of the way that Bitcoin is performing. But if Bitcoin loses and starts making lower highs and lower lows, then you're going to want to probably not be in that position for very long, right? So again, a lot of little variables to take into consideration, but the key takeaway here for you in this scenario is to ensure that you wait for confirmation. You wait for 2 solid green bars on the 15-minute chart if you're doing, just say, a swing trade. If you're a day trader, on the 1-minute chart, you'd want to wait for at least 3 solid green bars. That would be just, say, a 3-minute time frame for that confirmation above EMA and above VWAP. Okay, that's kept me super successful over the years since I've learned this, and I can tell you that it's one of the best philosophies to adopt and to understand, because I know I make it sound simple, but if you continue to use it day in and day out, you'll start seeing the science of it. And if you have really good risk tolerance and good risk management, you'll be in much better shape. You should always shoot for a 2-to-1 ratio. Okay, so if you're going to risk, just say $1,000, you never want to lose more than 1%. Right? So on that 1,000 you're putting on the line, set your stop limit for 1% loss. If you use these tactics I'm referring to and you're patient, you'll almost always hit 2 to 5% gain, and that would be your exit strategy, right? So you set a limit at just say 5% if you can see that happening. But the bottom line is, if you always shoot for a 2-to-1 ratio, you're always going to be profitable, even if you're a 50% trader. Just say you win and lose 50% of the time. If you have a 2-to-1 ratio for risk tolerance, you're going to be in a position where you're going to be able to, 66% of the time come out ahead. All right, it's just simple math, simple numbers. So again, be smart, don't get greedy. If you're going to hodl, that's perfectly fine. Do you, but just note that big picture here, if you're going to hodl, that Matic has strong potential to increase in price as long as Bitcoin can continue to hold. Because Matic has proven to do very well when Bitcoin goes sideways. Bitcoin's gone sideways for 2 days now, and I feel that we're on the verge of a breakout. So I really hope that that does happen for all of you. All right, anyways, I hope you found benefit from this. If you do, like and subscribe, comment below, join my Telegram community. Feel free to show your support on Patreon. And just know I'm also going to start doing live streams here in the near future. I'm working out the kinks. I've got a better microphone. I'm going to work some things out, practice a little bit more, and get that taken care of so we can get you better, a better experience moving forward. So you can make your requests, and I can do what I'm doing now live, and you can kind of join in and have some fun with me. That'd be great, right? Also, thing would be great too is my Signal group. I'm creating a Signal group here for my my premium Patreon account. So if you're interested in that, I'm going to provide good signals and good opportunities for entry points and just some best practice things along those lines to help you out as well. Okay, so be on the lookout for that. But without further ado, really appreciate your time. We'll go ahead and call this an end. Hope you have a great rest of your day. We'll see you in the next video. Take care.